Hello again, everyone. In this technical analysis of the stock market video, I call it bracing for China because that's what the markets are doing right now. The China markets, like the Shanghai Composite, have been closed for 6 trading days. The last time they were open was Thursday, January 23rd, and then they closed for their New Year's Eve, which was the 24th. And then they were shut down all of this week, and they're supposed to open Monday. And of course, Monday is our Sunday evening. So it's around 8:30 or so Central Time, 9:30 Eastern Time, that the markets open. It'll be really, really interesting to see what the impact's like. And I'm going to talk about that. We're going to talk about the S&P 500 today, the Shanghai Composite, the China Large Cap ETF, FXI, the Emerging Markets ETF, EEM, and then we're going to look at oil. All right, so here's the S&P 500 on Friday, down 58 points, and of course the Dow is down 603 points. Big move to the downside. And you can see back here, where is this? Here's January 23rd. So since Thursday, January 23rd, the S&P 500 has dropped 3%. So I think the Shanghai Composite is going to open multiples of that. I wouldn't be surprised to see 6 to 10% or more. So we'll see what happens. Of course, a lot of it depends on, what does the Chinese government do too, in terms of any kind of announced policies or things that they could do. So let's take a look at the weekly view here. For the week, so here's that Harami pattern that we had in the candlestick pattern last week, and we got the follow through to the downside. We got the first break down in almost 70 points. So it's going to be interesting to see what kind of follow through do we get in here. I think it could be the start of something, but nothing goes in a straight line, of course. Okay, and so we'll take a look at the Elliott wave picture. This is the Elliott wave pattern I've been working. I think we're talking about the fifth intermediate wave, okay? And so I think that this fifth wave is looking like an expanding ending diagonal pattern. And in that type of a pattern, you have wave 3 is greater than wave 1, wave 4 is greater than wave 2, and wave 4 needs to overlap wave 1. So if that's going to overlap wave 1 on the S&P is down here at 2954. So we've got a ways to go, but the shape that these waves take are the shape of a zigzag. So that's what we're watching for to confirm. I mean, there is another bullish scenario I've got, but it's not worth spending time on at this point because so far the wave structure has been tracking this scenario fairly well. Okay, so right now we continue to look for this to come on down. And typically in a zigzag, you're talking about an A, B, C, and that's typically going to be 5 waves, 3 waves, 5 waves. So right now what I'm doing is I've kept my eye out in here just watching the wave structure to the downside. If we drill in and say, okay, what have we done so far in this move down? Here's a 195-minute chart. And a 195-minute chart cuts the 6.5 hour day into 2 equal days, 2 equal bars of 3 hours and 15 minutes each. That's why I use it. It's very nice. And then, of course, the 65-minute chart does the same thing for 6 equal bars. I call it my hourly chart. And here's what this looks like. So you could make the case that we may have 5 waves down, although this last move in here is a little bit questionable as to what we've got. There's a couple of ways of evaluating and looking at it. But a couple other things jump out at me. Okay, we're getting some bullish divergence in here on this hourly view. And this last hour of the day on Friday, look how the bulls took control and came back. So many times when you start to get there's no guarantee, but a lot of times when you start to get that, it's like a prelude for at least a little turn. So we could be getting some kind of a snapback. You can see how the bulls came back in this hour. The bulls came back in this hour. And kind of a little bit of a lead up to a turn. So we'll see what we get. Our markets have been going down. China's been closed. So China's going to play catch up. But then they're also going to be at more of an extreme, I believe, because of the fact that they're being more heavily impacted. I mean, they got so many things that are just shutting down within the country right now. All right, so that's the S&P 500. Let's take a look at the Shanghai Composite. Okay, this is a weekly view of the Shanghai Composite. And here's the bigger picture. Here's from back in 2015, the big collapse that we had. And right now, I feel like, the way I've got this wave structure labeled, I think we're still working our way to the downside in here. And I've been looking for this to break down. I've been looking for this to come down as a wave 3. And I think we're going to get that this week. I wouldn't be surprised again. If we're down here 6 to 10%, we're going to be down in this zone. And this bar right here is a little, it's not really, shouldn't even be there, because this is the week of January 6th and the 26th, and the market wasn't even open that week. So I tried to look at the daily and try to delete the bars. You can see all of these, the market wasn't open. The last day it was open was this candle right here, and that's January 23rd. It's been closed for 6 straight days. So this is the weekly view. The last valid week was right here, and that was 4 days, I think it was. And so now we'll see what we get as we come on down out of this. We're going to get something like this, I think. Let's take a look at the FXI, China Large Cap ETF. Okay, here's what this ETF has done the last 2 weeks. Again, this is a weekly view. And it was down $2.61 this last week, basically falling out of bed the last 2 weeks with everything that's going on over there with the virus. And of course, I think the Hong Kong protests and things are still going on. I just saw a blurb just this morning. It said that a whole bunch of medical folks are striking in Hong Kong. And I didn't read the article. I just saw the headline. All right, so the large cap ETF, China large cap ETF, is really, it's tied to the large caps on the Hang Seng Index in Hong Kong. That's where most of the stocks that this is tied to are residing. And this is the bigger picture. This is all the way back to 2007. Here's the 2008 crash, and here's what it's done since then. So to me, it's like it's in this big trading range. And now, as I see this come down, I really feel like, the next target down here is this support area around 37.85 to 38. And if that doesn't hold, there's a pretty good chance it would be heading to the bottom of that trading range. We'll see. But right now, the first target is down here to see what kind of support comes in this level around 38. All right, that's FXI. Let's take a look at the emerging markets, the EEM. Okay, here's a weekly view of EEM. And this is all the data I've got on this. And this goes back to 2003, April 2003. All right, so what I've did is I started the wave count to try to analyze all this corrective type of price action since the 2007 high. And so here's what it looks like to me. And I feel like we're in this big ABC type of move in here. Now, granted, the pattern's big, but this seems to be playing out. You can see how this resistance up in here played out for this move for the top of this wave B. Okay. And now I think we've started down in wave C. In wave C, I'm expecting a 5-wave move. So right now, I think that we've completed a second primary wave up to the upside here, an ABC move. And now I think we're going to be coming down in a third move, and it should be strong, and it should be impulsive type of structure. And I think once China opens and starts impacting EEM, I think we're going to get a heck of a lot more negativity kicking in. So that's the picture. Again, the support down here on EEM is probably going to be in this 38 to 38 3/4 area, was where prior supports come in before, and we'll see how that holds. All right, that's it for that picture. Let's take a look at oil, and then we'll be done for the day. Analyze USO as a proxy for oil. I don't chart the actual futures contracts I don't trade those futures contracts, so I don't want to pay for the the exchange fees for the futures contracts for those particular ones. I do for some. And so here's what USO is doing. Look at the kind of move we have to the downside. It has gotten extreme. We're definitely oversold. It looks almost like 5 little waves down to me. I have been looking for this for a long time. We got several little fake outs. I thought this looked very corrective in terms of the overlapping type pattern to me, and we're finally getting the move. So the way this looks, when I look at the Elliott wave picture, here's what I think is going on. I mean, this created a lot of confusion. Let me blow this out a little bit. This created a lot of confusion for a while, but I think this is the best take on it. And again, what I think is happening here is we're doing an ending. Let me go to the weekly view. Do this. I think we're doing an ending diagonal type pattern in here. Okay. And so again, we're looking for zigzag type moves. So here's an A, B, C zigzag. Actually, this should be going up to this B, which, well, it is because B and E are tied together. That's why it's doing that. So A, B, and B was a triangle. As you know, Elliott wave triangles are in B waves or fourth waves. So that's why this fit very nicely. So now I'm expecting this to come down in complete wave C, but I'm expecting it to be a zigzag, which is why when you look at the daily view in here, you know, we've gotten the first leg down and we've gotten 5 waves. So now I'm expecting a counter trend move in here, and we're oversold. So that's what I'll be looking for, a little bit of maybe a zigzag back up. It doesn't have to be a zigzag. It could be, you know, a B wave, could be a flat, some kind of, you know, a triangle, but some kind of little corrective pattern in here, and then another leg down and complete C wave. So that's the picture on oil. So far it's accommodating the scenario very nicely, and we'll see where we go with that. All right, that's it for this week. Bracing for China. We'll see what happens Monday. Everyone have a great weekend. And if you felt like the video was helpful, please hit the thumbs up. And if you're not a subscriber, hit the subscribe button. And if you'd like to have more of this kind of information on a daily basis and trade ideas, head on over to joehenches.net and check it out. All right, everyone. Have a great weekend and have fun watching the Super Bowl.